Hello and welcome. Here at my tax accountant, we get asked a lot of questions, but there's one that comes up time and time again. Can I get tax relief on my mortgage interest? It's a huge expense for so many of us, so today we're going to break down the answer for you. So let's just get straight to the point. The big question: can you actually save tax on your home mortgage interest? For millions of people, the answer could make a real, tangible difference to their finances. Let's find out what the rules really are. Okay, first things first, let's cover the reality for the vast majority of homeowners here in the UK. This is the baseline, the fundamental rule you absolutely need to know before we go any further. And the direct answer is, well, unfortunately, no. If you're an employee and your home is just your home, HMRC sees your mortgage interest as a personal living expense. That means you simply can't offset it against your income tax. Now, I can almost hear some of you thinking, hang on a second, I'm sure this used to be a thing, and you'd be absolutely right. There was a scheme called MIRIS that did just that, but long story short, it was seen as pushing up house prices and was completely phased out, getting abolished for good back in April 2000. For most people, that was the end of the story. So for the current tax year, if you're an employee who just uses their home as a home, the amount you can claim in mortgage interest tax relief is a big round zero. But, and this is a very important but, that is not the end of our story today. That's because there's a huge, game-changing exception to this rule. And it all comes down to this: using your home for business. If you're self-employed or you run a business from your house, the rules change completely. And here's where the path splits in two. For purely personal use, no tax deduction. But for business use, there is a potential deduction. And this is the key that can unlock some real savings if you're a self-employed person, a freelancer, or a business owner working from home. And we're not talking about some niche little loophole here. This affects a huge number of people. In fact, over 4 million self-assessment filers claimed expenses for working from home last year. That's a 15% jump since 2020. So this is a major opportunity for a lot of people. So if you're in that group, the next logical question is, how do you actually calculate what you can claim? Right? Let's get practical and walk through the exact steps you need to take. Let me tell you about a real-world example. We had a self-employed graphic designer, let's call him John, who just assumed he couldn't claim a thing. But after we helped him map out his home, we realized his office took up a solid 15% of the space. Claiming that proportion saved him over £600 on his tax bill. That's real money that was almost left on the table. And here's the 4-step method to do it, based on official HMRC guidance. First, assess your space. What percentage of your home is used for business? Second, factor in your time. You have to adjust it if you don't work from home every single day. Third, gather your costs. Just find the total annual interest on your mortgage statement. And finally, you calculate your proportion by multiplying it all together. Let's put some numbers on this to make it super clear. Imagine your annual mortgage interest is £5,000. Your home office takes up 20% of your house. And you work from there 4 out of 7 days a week, so that's about 57% of the time. You just multiply £5,000 by 20%, then by 57%, and boom, your total deductible amount is £571. Simple, right? Okay, so now you have the formula. But hold on a side, there are a few really important rules and pitfalls to watch out for. Getting these wrong can be costly, so let's break down the things you need to be mindful of. Here's a detail that many people miss. Where you live in the UK actually changes how much cash you save. The deduction rules are the same everywhere, but our income tax rates aren't. For example, an £800 deduction saves a higher rate taxpayer in England £320, but in Scotland that same deduction saves £336, all because of their different tax bands. And here are the most common traps to avoid. First, keep your records. HMRC can ask for proof, like floor plans or work logs. Second, and this is a big one, do not use simplified expenses. That flat weekly rate from HMRC doesn't cover mortgage interest. You have to use the calculation method we just went through. And of course, always be honest and adjust for your personal use time. Oh, and a quick but very important note for any limited company directors out there: the process is different for you. You don't claim this on your personal tax return. Instead, your company can reimburse you, and it's claimed as a business expense. This saves you corporation tax, which can often be even more beneficial. So, we've covered a lot of ground. The rules, the big exception, the calculations, the pitfalls.
Let's boil it all down now to the essential takeaways, your next steps. So, to sum it all up, for most people, on a personal mortgage, there is no tax relief. But a really valuable deduction exists if you use your home for business. Any claim you make has to be based on your actual space and time usage. The saving in your pocket depends on your tax rate and where you live. And finally, documentation is absolutely crucial.
And this all really brings us to one final important question. After hearing how this works, I want you to ask yourself, are you confident that you're claiming every single deduction that you are legally entitled to? For many people, the answer might now be, I'm not so sure.
If that question makes you pause, or if your situation feels a bit more complex than our examples today, it can be really worthwhile to get some professional guidance. For tailored advice on your specific situation, the experts at My Tax Accountant can help make sure you're not paying a penny more in tax than you legally have to.